let me just get in Gurmeet Chadha in for the conversation as well. Gurmeet, great having you. Thanks for agreeing to talk. And what do you
Thank
think is
you.
the impact? Let's start with the micro first, Gurmeet. What do you think is the impact here? Do people take
Yeah.
a risk of, do fund managers like yours wait for an opportunity to invest, or do you realign portfolios from having a large export focus to maybe a more domestic focused portfolio?
So these, I think, 20 above 25%, whether it is 50 or 75, virtually the commercial viability isn't there. I don't think so. The trades will happen. So this is not the time to really discuss, which themes. Obviously, the listed names in textiles and gems and jewelries, selectively auto will get impacted. Also, the deadline is 21 days. So I am of the camp. I don't think so. 50% will stay. I think this is hard and hard negotiation. A lot of bit condescending also. So very disappointed. The language used is as if you are talking to as Ajay Bagga sir also said, some island or a sort of small country. This is not the language you use for your stronger allies. And whom are you choosing against what? So very disappointed, to be honest. But I don't think so. These rates will remain, and I think there will be a broader impact. I think the FPI impact would be there, as Ajay said. Already, we have witnessed relentless selling by FPIs. They are already 92% shorts. So I think somewhere we have made an error by raising capital gain taxes at the wrong time when economy was slowing down. At the same time, not cutting taxes on the GST front despite making enough noise around the budget. So I think time to basically do some back channel checks. I think the rate will get revised, and in the interim, just stay light. I don't think so. You should react on everyday news and order, and it will be 21 days before it sets in. And for now, just avoid the spaces which are impacted. Just that point is well taken. But I don't see a lot of downside, Neeraj. Also, I'm sticking my neck out here saying that I think a lot of there's a lot of negativity in the market around this, and this in few days from now probably some reversal will happen on the touch.
I'd like to question that. There was a note which said that if indeed these rates stay as they are, that's about 25% means a 5% impact on the MSCI India universe. So assuming that for now, because it's 50, I know you said that it will not last. You're assuming that for now, because it's 50, there is mathematically a 10% EPS impact. You don't think that brings the market lower by at least 2-3%?
2-3% needed can happen even without any tariff order. Let's say you have bad earnings from few couple of large cap sites, which is what been the case. Lot of the sideways movement in India or the correction, which happened because of other reasons than tariff. Tariff only came into the picture now. So that impact can happen, but this is not event which can take down markets by 10-15%. Yes, a few percentage basis points sentimental impact will happen, but there is a second, third order impact because on FDI flows, there could be some tomorrow pressure put on other nations also where US has a deal. So I personally think this is the financial systems and trades are built on trust. And if you use trade as a leverage and your currency as a leverage, even the reserve status at some point of time will get challenged. So there are a lot of long-term damage which US will also incur. So I'm still of the camp that sense will prevail. And analyzing this mathematically to me would be keeping it too simple. There will be a lot of second, third order impacts needed.
In terms of
If
just
it's there.
here and Gurmeet, hi, Tamanna here. In terms
Yeah,
of the
hi.
here, tomorrow we will see a bit of a gap down because of just the enormity of what's happening, and to add to it, the fact that India is coming and hitting back. We're not sitting quiet. We're saying this is extremely unfortunate. We've responded very sharply. Do you think that any gap down is an opportunity also?
So, a large gap down, it's an opportunity, but if you see it seems like a more slow grind to me, Tamanna, the way markets have been. And markets are also differentiating. So if you see, for example, IT where numbers were weak, the IT stocks have corrected. Even the star performers like Persistent, Coforge have corrected. We have seen good impact on textile stocks like Gokuldas and others of the world, where tariff will have a bigger impact. And relatively less impacted sectors like banking, like some of the defense name after the orders came of 67,000 crore per. So market is differentiating. It's not that everything is going down, right? It's clearly differentiating where there is, and that's the beauty of the market. It will price in things one good thing, and I'm saying this amongst all negative news, is now you can discount the impact. I think earlier there was a lot of uncertainty, right? 25 additional. So now, you can discount some impact. And in next 21 days, hopefully, these rates, it's happened with China also. They raised, but China retaliated. Eventually there was a pause. So I'm sure, something will get worked out. But for now, I think just stay light. Sometimes there is a tendency to react on every day and buy on every day. Sometimes it's just, good thing not to do much. Just stay quiet, use cash to your advantage, and once things settle, it's fine. It's not that you are 0% in equity, right? If you're 0% in equity, yes, obviously you should keep adding more. But if you have an asset allocation in place, do not react on a daily basis.
Gurmeet, Gurmeet Hiral on this side, when you're seeing a knee-jerk reaction right now, also if you see GIFT Nifty, you're seeing almost 100 points cut, which is 0.4% lower, which is probably telling you that yes, there could be some bit of resilience. But do you think we could go with this 100 points GIFT Nifty cut to take cues for opening trade for tomorrow?
See, I'm saying, nobody knows, what Nifty, what it opens, and I think if Nifty is no longer an indication in terms of how the market pans out. But assuming the reaction, I think the reaction is more muted, even on additional 25%, because the market somewhere is also pricing in that these rates will not stay. But if these rates stay, which is what Neeraj said, then it is not simple mathematics. Then practically you're talking about trades not happening. 50% no trades will happen. And there are second, third order impacts on flows, etc. So, and I think we are also ruling out that India will not respond. Who knows, we can respond in terms of tax cuts, in terms of doing some low-hanging fruits, in terms of increasing FDI limits on few sectors, capital account convertibility, GST cuts. I think a lot of it will have, response will also come on the domestic front. So I think because the macro picture is stable, oil is well behaved, CAD is in check, I think our ability to respond is better, and that is where probably market is drawing solace.